This is Justin's scoop for Friday, September 19th, 2025, looking at SPX. The video is coming out a little bit late because I had a personal issue come up on Friday. So here we are. Take a look. This will be for Friday's video. I'll probably still put it out with Friday's date. And so Thursday's all-time high was 66.56 and 80 cents. So I'm trying to get the cursor right about there. And what I want you to see is where I've got the cursor on the top left in the daily. Look at where the line is, the horizontal line is on the 3 minute on the top right. And it was above where we were pretty much till 2 p.m. Central. So a couple really cool things about that. We're so close to a new all-time high. It should get there, right? Like the market should do what I want it to do. Well, it did it, but it did it by a little bit, and it only did it in the last hour of the day. That's the first thing to watch out for. It may not do it when we want, and so we want more time. Or we want to make sure that we are limiting our risk to only get into something when we know we can risk a certain amount, and maybe that option is going to go to zero. So that's what I've got set up on both the bottom left, bottom right. So what I was able to find is kind of this portion of the day, as we're going relatively sideways through here, it just has a little more to push up. But if it doesn't do that, maybe it'll break down, which it didn't end up doing. So through this time, you could have easily bought this 66.25 put for $1, and you could have easily bought this 66.65 call for $1. And so, yeah, your risk would be $200 on that setup. And both of them immediately, or not immediately, but both of them after that time sold off so that you'd be losing some value. I don't even have this one on the screen. There you go. Both of them came down to around 40 cents, I think it is 35, 40 cents. So 35, $40 for both of those. That means you would have been in for 200 and you are at around 75, 80 bucks, something like that. Yeah, that sucks being down by that much. It's more than 50% down, cut your losses and go. But again, we're so close to making a new all-time high, or we're so close to, okay, it's going to reject and it's going to just move down. Either one could still happen. It's not up to us. It's the markets are just going to move. So being most opportune for both of those, being in both. I didn't do this. You could have done it. I'm just presenting another method that, or a method that you could do that with. So ultimately, obviously, the puts are going to go to zero, and the calls, once we actually break out, actually get moving, and they moved huge, and they ultimately got pushed up past five here, and then up past eight on this upper wick. Either one of those would have been a great exit. So, like, where could you exit? Because you want to make up for the other trade. You don't want to just exit at $1 and get break even on one and lose 100 on the other. You could get out for 200 on this one and have your exit. Let's see, right around here, and then your break even, and it chopped around through here. Or you get your target set a little further. 3, 4, 5, 6. Any of those would have been a multiple of the 200 or of the 100 you risk on this trade, and then would have covered the 100 on the other trade. Probably go for like 4 or 6. Those would have been great values to look for on that option. It ultimately went past 8, so you could have gone for 8. That would have been in the last 6 minutes of the day. Definitely train yourself if you're going to hold that long. I have trained myself. I love when these spike up like this, as long as I've got the right option price. It's too late if you're going to move your target to be in range of that upper wick. It's too late to do it manually. You got to just have it there. And I'm working on, where can I have it? Where's the optimum place to have it? But then if it misses, usually you're going to lose quite a bit of premium in that last few minutes because the market makers don't want to pay that out. They want it to go to zero. So this actually ended, the 66.65 actually ended uh, out of the money, even though, let's see, so the close was 66.66 and 36 cents. So we actually ended up out of the money, even though where this candle closed looks like it's still got some value to it. Technically, it didn't. It shouldn't have had any. It's just the premium from how things were moving, I think, kept some value in that. The low was actually zero point 0.2, which it should have been zero. But anyway, I didn't have that option in my broker. I didn't own it into the actual close because that would have done something to my account. I don't want that to happen. So I'm always on the trigger, ready to just exit for 0.05 I can wait on doing that to the last second. Sometimes it fills, sometimes it doesn't. But that would have been my way out to just exit with a stop or exit with a limit at that price. Sometimes it'll fill in the last couple seconds of the day. But then obviously, you're going absolute zero because you are basically at zero. But that absolves you of the risk if you're still in the money or right at the money. And just the way that it moves into that last few seconds, you can still get out of the trade. Done that, had that happen. Uh, yeah, you definitely want to practice that with everything being live, and only risking like one contract so you know how things are going to move. It really puts the pressure on when you know that's happening. But it also is something that's it's hard to really prepare for unless it is a live thing. So absolutely make sure you have a clear understanding of what the risk is. I would actually probably suggest starting an SPY with that instead of SPX, uh, and still trade it into the 2:59, 3 o'clock time, because SPY you actually have an extra 15 minutes. It closes at 3:15, so it you can still trade it through 3:14 Central Time, PM. So that's also another way of looking at the 2:59 time, that minute, if you're going to get down to the wire. In this case, it actually moved up in the 2:54 to 2:56 range, PM, just because it was the second to last 3 minute candle. So it gave some opportunities to get out on that spike up. And unfortunately, I did not have my target in that range on the trade that I was in. And so I still got out for a great gain with $100 risk. That one that I was in was 66.60. And so I waited a little bit later. So I was $5 closer in the money. And so I got into this for $1 over in here, and I was busy with some other activities. And so then all of a sudden it's like, oh, the market's moving that direction. Hey, this is great. I think this is going to keep moving up, and it did. And so then I was kind of tightening a stop a little bit through here, tightening up to three at some point. I only pulled back to 3.5 or so, and pushed up, and I think I'd have to double check if it was right through here or it was over here. I think it was right through here. Then I moved it tighter just to be like, okay, I'm out. Actually, no, I think it was over here. No, I'm not sure anymore. Let me see if I can check real quick. Need my log to load, and it's slowly loading. Okay, let me see if I can find that trade real quick and see. So where I exited was at 2:52 p.m. So I was waiting till over here, and I was down on a 1 minute chart, and it just wicked down right here before it wicked up over here. But then I had already moved my target out because I saw it moving. So my target was 11, and that would have filled on that candle had I not tightened the stop and had I not moved the target. So buying for $1, selling at $11, that would have been $1,000 gain. It's not what I got. I got something smaller because I got trailed out for a nice gain. And I moved the target up because it looked like it was just going to race up. You know how we've had a lot of bullish rallies right at the end of the day. It didn't do that. I easily saw this going up to 66.80, and that would have been about 20 points in the money. And so I think I moved that target up to 21, anticipating it was just going to keep on rolling up in that last 5, 6 minutes, and then it didn't. It pulled back, just because we had held. The reason being, we had held this. That's not what I wanted to highlight. Let me do that. We had basically held all of this range all day. And then last hour, I'm like, okay, it's going and it's going to explode higher. And we're going to close with a shave top candle. And, we've done stuff like that. We did something very similar to that over here. We're clearly above the midline of this uptrend channel. We did that sort of move over here. We're continuing higher. We're trapping any of the bears from, the Wednesday with the rate announcement. So there was clearly a rest, and now there's clearly a continuing move up. We're just not doing the alternating candles. Maybe it's alternating by two. So two red candles, two green candles, maybe two red candles Monday, Tuesday coming up. I don't know. We'll see what happens. Two, we've been alternating a couple other times, but we did the alternating uh bear bull through all through this, and then it's that kind of broke out. That pattern broke when we went into two bear here and two bull here. So I'll compare it back over to this range. Over here, we were alternating bear, bull, and then we got three bulls in a row, and then a bear, and then a bull, and then a bear. So we were still doing the alternating thing there. So yeah, that's kind of how we were doing that, but we're not following that pattern. We didn't follow a certain number of candles in a row. Let's just look at what the market is doing. Let's see. So like we've got a lower wick, we got a little bit of an upper wick. We were still making higher highs, new all-time high on Thursday, on Friday, and I have not checked to see where futures are at on this Sunday evening while I'm doing the recording. So I don't know to even project where things could open up for Monday or where things could trade for Monday. At some point, we need a bigger pullback. I would love a pullback into 6,500, get back down below the yellow line here, the yellow exponential moving average. I guess we'll just have to wait and see. All right. Hope this helps. This is Justin.